Hey everyone, this is chapter 12 from Trading Price Action Trends. It's about pattern evolution. It's a very short chapter, but it's just to create the mindset of understanding what happens when patterns fail and how to track the progression of how one pattern evolves into another. So Al talks about how patterns morph into other patterns and evolve into larger patterns. So one pattern that you might recognize, so for example, a high to bull flag or a low to bear flag, it can then morph into a different pattern in the opposite direction. And the most common morph pattern is a failure. So for example, here we have a low to sell. I talked about second entry traps in chapter 10. We have a low to sell, second entry sell, and instead of getting a sell-off, that sell failed with that bad entry bar. So a lot of traders will, after a low to failure or high to failure, a lot of traders will enter above or below the entry bar. So here we have a second entry sell, bad entry bar, and a lot of traders will enter above the entry bar, betting that the sell signal failed. So here we have a failed low two that turns into two more legs up. Here on the same chart, we have a high two buy, and the high two buy has a bad entry bar below the moving average. Many traders will sell below the entry bar, betting that it failed, betting on one or two more legs down. Same thing here. We have a wedge bull flag at the moving average, strong rally, first entry sell, second entry sell, bad entry bar. Some traders will wait to buy above their entry bar. Limit order traders will possibly bet on a failed breakout and buy with a limit order, but some traders will buy above with a stop above the entry bar, and some traders will wait for the breakout and buy after a breakout and follow through. Typically after a sell signal or a buy signal fails, if they're credible, you usually get a couple legs up or down respectively. So if a low two fails, typically get two legs up. If a high two fails, you typically get two legs down. Another example, so second entry sell, bad entry bar, where the leg expectation is that we should get one more leg from this. So some traders buy above the entry bar, some traders wait for the bull bar, but they're betting that the sell signal has now failed and that we should get a little bit more up. So there's failed second entry sell. Here's a failed wedge. So we have three pushes up, one pullback, two pullback, three, sell signal at the moving average after a strong sell-off. And instead of breaking below the higher low and getting a move down, we instead go outside up and get breakout and follow through above the moving average. So traders have to be aware of what happens what will it look like if the wedge bear flag succeeds, and what will it look like if the wedge bear flag fails, and then what's the next progression from that. So here we have a strong breakout of a wedge bear flag. Typically when you get that, especially if it's overall trading range price action, then you often get a measured move up of the wedge bear flag, which we got here. You can also get a failed high two becoming a double top bear flag in an opposite breakout. So here, this is a daily chart of the E-mini, and we had a spike in channel, a tight channel up, and we got a high two buy here with this doji, and then we got a good entry bar. So this is technically a high two bull flag, but a high two can always fail, especially if it's at the top of a trading range, which it was here. So a high two can morph into a double top bear flag. And if the bears get a bear breakout from that, we could get a couple legs down, a couple small legs down, a couple large legs down. In this case, we got a really strong breakout and we got two large legs down. So high two can become a double top bear flag and bear breakout. A low two can become a double bottom bull flag and bull breakout. So here's an example that Al shows in the book. I believe it's in chapter 13. You get two legs up. So a large low two and possible two-legged bear flag. That two-legged bear flag and double top bear flag becomes a double bottom bull flag and eventually gets a strong breakout above. Same thing here, we have two legs down, so possible high two buy, but top of a trading range near the high of the prior day. So that high two became a lower high double top bear flag and we got two legs down. Another example that Al mentions in the book is failed final flag reversal becomes breakout pullback. So the pattern that you're looking at is you see a final flag and you're betting on a trend reversal, but that fails and then eventually breaks out in the opposite direction. So here we have a possible final flag and a breakout. So this could be a final flag reversal when we start to rally up here, and we could get two legs up to the top of the final flag. Instead of becoming a final flag reversal and two legs down from this, it ends up finding resistance up here at the sell signal and becomes a breakout pullback sell for more down. We actually had an example of that during the day as well. So we had a really strong rally, tight trading range, possible final flag. We got a really strong breakout, and some traders after 3 bear bars will think that it's a final flag reversal. And this final flag reversal ended up getting down to the bottom of the final flag, but then that became a breakout pullback buy for a new high. So the idea here is to understand how these patterns progress and what to expect once they complete. So once you get the final flag reversal that ends up testing down here, what's next? Is it a major trend reversal and a move down to here? Or is this going to become a double bottom bull flag for more up and become a breakout pullback buy? So it's just constantly thinking about what's next and how these patterns are evolving. Now, those patterns that fail can also just become larger patterns in the same direction. So a small high 2 can become a larger high 2. So here, this is also a chart of the E-mini. We had 2 legs down and a possible high 2 bull flag. And instead, it formed a lower high double top bear flag. So every high 2 is still in a bear channel. And if it can't break above the last lower high and break strongly above, then it can still be in a bear channel. And in this case, we could not break above. It ended up becoming a double top bear flag. We got a strong breakout. And usually when a high 2 fails, you get 2 legs down. In this case, we did. We got 1, pullback, 2. But this initial high 2 failed initially, but then found support down here and became a high 4. And we closed the day on the 60-minute chart with a high 4 buy signal. So high 2s, when they fail, it doesn't mean that now we're going to reverse the entire market. It just means that it's going to evolve into something else. It can be a strong bear breakout that does reverse the market, but it can also be a larger, more complex pattern in the same direction. In this case, it was a high 4 buy, and we ended up getting a new high. Even in this case, where we had the high 2 becoming a double top bear flag and then bear breakout, it got 2 legs down, but then that whole thing became a large high 4. So we had high 2 here, and then breakout, and then another second entry here. So it became a larger pattern. You can call it a large wedge bull flag. You can call it a large high 4. But this initial high 2 morphed into something larger. But because of the context, it was still likely to get a second leg up from this move from 9 to 10. And so just because the initial buy failed, it doesn't mean that the whole bull flag is ruined. It just means that it could be evolving into something else, or it could actually end up reversing. But the point is to understand how they progress and what they'll look like as they're progressing. And then here you get a low 2 bear flag that morphs into a low 3 wedge bear flag at the moving average. That also fails. And eventually you get a failed breakout above a wedge bear flag, 2 failed breakouts above, and that becomes a low 5 sell. So it's evolving into a larger, more complex pattern, but based on the context and the test of the moving average after a tight bear channel, the expectation is still that we're going to get a test back down unless the bulls can accelerate the market and get a successful breakout above the wedge. In this case, we got a failed breakout above the wedge and we failed twice. So that evolved into a larger low 5 sell. The last part about this chapter is to learn to expect things to fail. So even the best high 2s fail, the best low 2s fail. Every pattern has a failure rate, and a trader can equip themselves in the best way possible by understanding the behavior of the failures. So what does a pattern look like when it's failing? What does it look like when it's succeeding? And to become good at recognizing those things so that they can take advantage of when patterns fail and evolve into larger patterns. So quick chapter, hope that was helpful. Chapter 13 and 14 is going to be mainly about the conventions of drawing trend lines and trend channel lines. And then chapter 15 is a really a long chapter, really in depth about how to trade channels and how to interpret them. So I hope these are all useful for everyone. If you have any questions or difference in interpretation, please leave it in the comments and happy to discuss.